Let's take a few minutes to look at the price action here in the Euro US dollar currency pair. There are a few interesting points that I'd like to share with you from this 6-month range of price action. If you want, take a few minutes now to pause the video and make your own observations and then see how they correspond with mine. That would be a great learning opportunity if you are new to the wave principle. Our very first observation here should be that the trend is down, defined by the series of lower lows and lower highs. However, as Ellioticians, we also recognize the sideways price action as corrections and the downside moves as impulses. And this is very important when it comes to formulating patterns and their wave structures. So from the May peak to the November low, that is exactly what we're going to do. Try to define this wave structure. From my years of experience, a golden nugget that I'd like to share with you when doing this is to first decide what this cannot be. And from looking at the price action, many inexperienced wave practitioners will define the structure here as a 5-wave move, because we do have 1, 2 and 3 impulse looking declines, and we do have 1 and 2 pauses or corrections within the decline. And if we just get our trend lines and help define some of these moves, as in the impulsive move and the corrective moves, this alone can help us when defining or looking for the patterns. And here we can see the 5-wave trap, we could call it, that people will fall into. But what should stand out here is that the 3rd wave within this impulse is the shortest wave, and that is a rule violation. So straight away we can say that that is not what is unfolding here. But if we were to take a step back and see that we are favoring that this is an impulse, this is a correction, we can favor that we may have a wave 1 down, then a 2nd wave correction, and then within another 5-wave decline, we may have just wave 1, and now a 2nd wave, and a 3rd wave within that 3rd wave, and now the recent corrective or sideways looking price action, which may have not yet ended, could be setting up for the next rollover, which would be an impulse to the downside. And now with some wave labels added to the price action, things are looking some bit more clearer, and when I do that, then I will like to remove my trend lines. I think it's very important to have your chart as clean as possible, and then we can see the wave count that we're working with nicely. So from this we can see that we're looking for price action to continue lower within the 5 waves for this 3rd wave. So now at this juncture, once again we can use the wave principles rules to establish whether this trend will continue lower. So blue wave 3 down is unfolding as an impulse, and therefore the 4th wave must not end in the price territory of the 1st wave. So we can take the level of wave 1 where it ended at 1.1524, so we are not expecting wave 4 to overlap with that level. At the beginning of the video, we defined our downtrend as a series of lower lows and lower highs. So under traditional technical analysis, price action would actually have to trade above 1.1692 to break that series of lower lows and lower highs. So here we can see that the wave principle is offering us key level closer to current price action, which would be a warning of a trend reversal unfolding or a reason to reconsider our wave count. However, the beauty of the wave principle is we can actually take it another step further by zooming in on the price action at lower degree of trend. So currently we're favoring a triangle is unfolding within this 4th wave position. And you can actually see the sideways nature of the price action, and that we do have a series of lower highs so far within this price action. So if this 4th wave has already registered its high, we expect the price action to remain below the 1.1382 level. So from this analysis and observation of the 6-month range of price action, Euro US dollar is actually at an exciting juncture. And we can see how some simple analysis has allowed us to come to this conclusion, but more importantly, offered us key levels to formulate trading plans or opportunities for the continuation of the downtrend. I hope you found this helpful, and I look forward to speaking with you in a future video. Thank you for watching.